Now back to my first ever purchase and how that investment taught me so many lessons. When I purchased Tesla stock, it was priced at around $781 a share. When you look at the charts, it was just after the stock had seen a rapid rise and destroyed all-time highs. The stock's price had fallen, and without even doing any research to why the price had dropped, or even a quick look into Tesla's fundamentals, I took the gamble and made my first ever purchase. After I purchased the stock, it just continued to fall, and eventually just moved sideways. There were some days of ups and downs, but my position in Tesla was deep in the red for months and months. But I held. Not only did I hold, I continued to purchase in, and I kept investing and dollar cost averaging my way down. From the original $781 I bought it for, all the way down to the mid-low 600s range. Till eventually I started to see some green. I'm no genius investor. Hell, I could have just put that money into the S&P and made some good returns over that period without the stress. This wasn't a story of me being a genius investor who found an undervalued stock after a long periods of research. I mean, if I was a great investor who did do deep dives into these different possible investments, I would have never even bought Tesla since it trades so stupidly over its earnings per share. I ended up holding on to my Tesla stock, and from about August to November, the stock went on a massive run, destroying all-time highs, and every time I checked the stock was up. My original plan of just holding on to my shares for a few years and letting the company grow, as the business was only just becoming profitable and scaling, recently was thrown out the window, and I was taught another investing lesson, and that was that there's nothing wrong with taking your profits. I ended up fully exiting my Tesla position on November the 2nd, 2021, when the stock was valued roughly $1,200 a share. Looking back now, I could tell myself I'm a genius for selling and managing to basically time the top. And yes, I did want to sell out, but I also got lucky on timing the top. Even as a long-term minded investor, you have to understand that even though you might love a company and still believe in it for the long term, if the price is well beyond what you deem reasonable, moving out of that position and allocating your money elsewhere might be the better option. But Tesla taught me a very important lesson that I believe is important for all investors. The legendary Warren Buffett has an amazing quote of this. He said, "Be fearful when others are greedy, and be greedy when others are fearful." Buying when the stock was lower and had taken that rough turn, and then selling it when it was high, might seem like the easy, reasonable thing to do from an outside perspective looking back at it. But at that time, it's hard to buy stocks when they're down, especially when you are new and all you see is red and losing money. And then it's hard to sell when everything is green and all you see is yourself making money. Another lesson my Tesla position taught me was that I didn't make the money when I sold Tesla on November the 2nd. I made it in the months where I held, and I added to my position and believed in the stock and the company and the narrative. You don't tend to make money when you sell directly, unless you are a trader. The time when you make your money is when you hold your positions for an extended period of time, through the ups and downs, through the earnings calls, through the news and media reporting on it, and the so-called experts giving their 2 cents of advice.